QuickBooks Online is an all-in-one bundle for all your accounting needs. The accounting cycle starts with recording transactions, categorizing and organizing them, then posting year-end adjustment entries to account for things like depreciation, amortization, and tax payments, creating an adjusted trial balance, and finally creating year-end financial statements such as the loss statement, the balance sheet, and the statement of cash flows. QuickBooks simplifies this process, streamlines it, so that instead of focusing all of your time and energy on recording and categorizing transactions, you can focus on your business. Let's dive straight into it. The first step is to record transactions, and the second is to organize and categorize them. QuickBooks combines the two and makes the process easier. Of accounts is a list of all of the accounts that your business requires to conduct day-to-day financial activities and record transactions appropriately. Whenever you record a transaction, the software automatically posts the transaction to the account that you set as the default for that transaction type. We'll get more into it later. The balances of these accounts are then used to create financial statements such as the balance sheet and the income statement. So a messed up chart of accounts leads to messed up financial statements, which altogether lead to a messed up you. Let's go to the chart of accounts and see the standard accounts that we have in QuickBooks. While setting up, when you choose the industry, QuickBooks automatically sets the standard accounts. Apart from that, you can create your own accounts that you will need later down the line to conduct business and record transactions. Once in your QuickBooks Online account, simply go to the accounting menu and select chart of accounts. Now, when you have selected your industry while setting up QuickBooks, the software creates a boilerplate chart of accounts for you. Right off the bat, you get some of the standard accounts necessary for managing your day-to-day businesses, such as the checking and savings account, accounts receivables, fixed asset accounts, liability accounts, and income and expenses account. You can even customize the chart of accounts. So let's say you purchased a spaceship, which is a fixed asset. What accounts do you create in this case? Fixed asset account. In fixed asset account, you need to create an original cost account to record the original value of the asset, and an accumulated depreciation account to track the book value and the amount of depreciation expense to apply on that item. On the expenses side, you will require the spaceship expense account, which will have sub accounts such as the fuel expense account and the maintenance account. And if you took a loan to purchase this asset, then a notes payable account, then you will have to create a notes payable account and an interest expense account. That's a long list. Let me show you one or two examples. Let's start with fixed asset account because that is what confuses most people. In the chart of accounts page, go to the new button. Select the type of account that you want. As the spaceship is a vehicle, it is a fixed asset account. So I'll go with assets and I'll save the account under fixed assets. In the tax form section, which can be used by your accountant to help you with your taxes, I'm going to select vehicles. And in the account name, enter the name for the fixed asset. And adding a description is optional. You can input the opening balance and date if you have moved to QuickBooks Online from another software and need to record the balance in this account. At the bottom of this new account page, you get a preview of the balance sheet. You can view where this account will show up. Click on Save. And now I'll create an original cost account and a depreciation account, which is a contra asset account. Again, go back to the new menu. Again, go back to the new menu, select assets, then fixed assets. And click on vehicles. In tax form section, in the account name, input original cost, and in save account under select the spaceship account because that is the because this account will hold the original cost for the spaceship. Input a description and opening balance if you prefer to, and click on save. Now the original cost account is a sub account of the spaceship account. And finally, I'm going to create an accumulated depreciation account, which is a contra asset account. So it will have a balance that is opposite of the balance that this type of account generally has. So as this is a contra asset account and asset accounts have a debit balance, this contra account, that is the accumulated depreciation account, will have a credit balance. I'll again select assets and I'll save the account under spaceship. In the tax form section, I can select accumulated depreciation, and in the account name, I'll enter depreciation. And click on save. Now I've set up the accounts properly, so the spaceship account has a sub account of depreciation and original cost. Now I'll create an original cost account and a depreciation account, which is a contra asset account, to further solidify this concept for you. Now the accounts in the chart of accounts are all over the place. Once you get to a point where you are creating financial statements to analyze your business's data, we have a workaround in QuickBooks Online, and that is enabling account numbers. Account numbers by default aren't enabled. To enable them, you can go to settings menu and click on account and settings. Go to the advanced tab, and in the chart of accounts section, enable account numbers and mark the option to show account numbers. Click on done. And now you can see that there's a separate column for account numbers, and you can use this column to sort the data. And by doing so, you can group similar accounts together. If you need to import a lot of accounts, especially more than 5, then it is a better idea to import the data for the chart of accounts from a spreadsheet. First, format the spreadsheet in this exact format. You can find the link to this template in the description. Back in the chart of accounts page, instead of the new button, click on the drop down option besides it and select import. You can connect your Google Sheets account. However, if you have an Excel file or a CSV file, then you can select browse. And select the Excel file that contains the data. Click on next and map your fields to QuickBooks fields. QuickBooks automatically identifies most of the fields, but if it gets something wrong, then you can change it here. Select next. And make the required changes. And after you have verified your selections, you can click on import. QuickBooks will automatically import these accounts and update the information from the spreadsheet. Here's what happens when you make an account inactive in QuickBooks Online. First of all, it will not show up in any of the transactions that you record in the future. Second, all of the transactions that are in the account will still be retained in your company file. And whenever you create a report, these transactions will be a part of them. And you will be able to view the entire history of the account whenever you want to. Let me just show you how it is done. Log into your account, go to accounting and select the chart of accounts. Select the account that you want to remove, that is deactivate. Click on the drop-down menu in the Action column. Select Make Inactive. However, if you want to make multiple accounts inactive, then QuickBooks has got you covered. Back on the Chart of Accounts page, select all of the accounts that you want to mark as inactive. Choose the Batch Actions drop-down and select the Make Inactive option. You also have the option to view the inactive accounts. On the Chart of Accounts page, go to the gear icon and mark the option to Show Inactive. You will now be able to view all of the inactive accounts in your company. You can select the Make Active option from the Action column to reactivate the account, after which it will start showing up whenever you are recording a transaction in the future. Remember that making an account inactive is different from deleting an account. There is no delete feature. And when you make the account inactive, it simply does not show up in any of the transactions that you record, but the transactions in that account are still retained in your company file for reference in the future. Because you will be purchasing and selling products or services, you'll have to set up both customers and vendors in QuickBooks Online. And the process is very simple because QuickBooks already provides you a lot of templates that you simply fill in the information into to set up both customers and vendors. Let's set up customers first. In the sales menu, go to customers, select new customer. Now you have this nice template over here that you simply need to fill in to record the customer. If you want a different display name, you can change it over here, and then you can input all of the contact details, which can help you in later contacting the customer or sending invoices or sales receipts through email or fax. And you can enter a separate shipping address if the customer prefers to get their orders delivered to a separate place. You can also make the customer a sub-customer. So if you do some work for a franchise with multiple stores, then you can create a parent customer for the franchise itself and then sub-customers for each of the locations at which you provide services. If you have any particular notes about this customer that you need to remember, you can enter it here. And any contracts, invoices, sales receipts that you have a physical or soft copy of can be attached by selecting the Add Attachment option. You can also choose the primary payment method that the customer prefers and the payment terms, which is the number of days the customer has to pay the due amount. The net 30 here means that the customer has 30 days to make the payment, and net 60 means that the customer has 60 days to make the payment. You can choose if the customer is taxable or not. If the customer is tax exempt, then you need to request a copy of the resale certificate. And you can select the tax rate for this customer. In the opening balance, you can input the amount that your customer still owes you, and you can select the as of date. You can also create custom fields I'll explore this section in a later tutorial. And once I've verified all of the information, I'll click on save. Credit memos are a much better way of handling customer returns, exchanges, and refunds. Darth Vader essentially purchases a lightsaber from your company, but he finds some manufacturing defects in it, so he comes to your company to return it back. Now you have got two main options. You can either refund all of the money or you can issue a credit memo against a future invoice. All of the amount of money that you have invested into acquiring a customer, you don't have to actually waste that investment. By issuing a credit, you essentially lock in the customer and ensure that they come back to you to buy your product. Credit memos are also a great way to build customer loyalty programs. Let's say in any of the instances you aren't able to provide a satisfactory customer experience, what you can do is give the customer a credit, a free credit, so that they can use it on a later date. And this essentially helps you in maintaining a really good customer relationship. Now let's go into QuickBooks Online and check how we can create credit memos and apply them to invoices. So in QuickBooks Online, you can either automatically apply credits on any open invoice, or you have the option to manually apply it if you want to issue delayed credits. If you want to change the settings, then you can go to the settings icon over here and click on accounts and settings. Now go to the advanced section where you will find the credit memo option. In automation, you can select to automatically apply credits or to switch it off. Once you are done making your selection, you can click on done. To create a credit memo in QuickBooks Online, you can go to the new menu and select credit memo. You can then select the customer for whom you want to create the memo. You can add tags in order to categorize or organize the data and select the product or service. Once you have entered all the relevant information, you can click on save and close. Now, if automatically apply credit memos option is enabled, then QuickBooks will automatically apply this credit memo to an open invoice for the customer, or it will apply it automatically when you create a new invoice for the customer. To check if a customer has an open invoice with you, you can go to the sales menu in QuickBooks Online. And select customers. From here, you can select the customer for which you created the invoice. Sorry, the credit memo. So you can see that this customer has a credit memo applied to their account, and you can see the amount, the total amount, and the status of this credit memo. So for this customer, we have an open invoice and we can select the receive payment option. Here you will find that there is an option to apply the credit memo. If you mark this checkbox, the credit memo will be applied to this invoice and the amount will be deducted. So as you can see, the open balance for this customer is $164. But as soon as you apply the credit memo, the open balance remains the same, but the amount received changes. And once you have verified all the information, you can select save and close. Now QuickBooks gives you a message that it has received the payment of $89. And in the customer menu, you can see that the total amount for that customer has been closed along with the amount for the credit memo. Now coming to vendors and suppliers, and especially the independent contractors that you may have to work with along your entrepreneurship journey, it is really important to collect the W-9 form from all of your independent contractors. And your independent contractors are those whom you have paid $600 or more during the current accounting period, and those who are not incorporated. So if the supplier or vendor is incorporated, then you do not need to collect the W-9 form nor file the 1099 form for that vendor. The W-9 form contains all of the essential information for an independent contractor, so you can simply take all of that information and put it into QuickBooks Online to create the vendor account. QuickBooks also gives you the option to track 1099 vendors and payments to them, so that at the end of the year, you can easily file 1099 tax forms using the data in QuickBooks Online. You can of course add a vendor manually, and to do that you can go to the expenses menu and select vendors, and from there you need to click on new vendor. Now you are going to enter the company name, but you can leave it blank if you are creating a 1099 vendor in QuickBooks Online. You can change the vendor display name, which is the name that will be actually displayed in your vendor lists. You can enter the name of the vendor in more detail. And then you can input contact information for this vendor so that you can send purchase orders and payments to the vendor directly from QuickBooks. If you prefer to write a different name for the vendor on the check, maybe the name of their company or a personal brand, then you can input that name here. And then we come to the address. Now this is the address where the payment will be remitted. So you can change the address here. And in notes, you can enter reminders that the customer is maybe evil or the customer does not provide. And in notes, you can enter reminders about the vendor, maybe their preferences of payment, maybe more details about the contracts that you and the vendor have agreed to. And you can attach any documents, proofs, or contracts that you and the vendor have agreed upon. And if you have received the W-9 form from the independent contractor, then you can attach that here. In additional information, you can enter the social security or the federal tax ID if the vendor is a 1099 independent contractor. However, the vendor is incorporated, then you can leave this section blank, and you can mark the option to track payments for 1099, which will enable QuickBooks to track all of the payments to this vendor, so that you can then use the payment data to fill the 1099 tax form and report payments to the independent contractors to the IRS. If you have pre-agreed to a billing rate or an expense rate from the vendor, then you can enter that. And in payments, you can select the terms, which is the number of days that you have to pay back the vendor from the date of receiving the bill. Net 30 simply means that if you get the bill today, then you have 30 days from today to pay the bill. Again, you can input the account number. In the default expense category, select the category that would be affected by transactions with this vendor, and put an opening balance if you owe an amount to this vendor even before you have created the vendor account. And you can add several custom fields that can help you later down the line in creating more detailed reports that categorize the data much better. Finally, you can review all of the changes that you have made, all of the data that you have entered, and click on save. And I need to stress this point once again, that you should collect the W-9 tax form from all of your independent contractors that you need to file 1099 tax form for. This will make the tax filing process a whole lot easier later down the line. To import the data, you need to have the data in correct format with the correct columns and data, so that QuickBooks can automatically map most of the data for you, and that will definitely minimize all of the manual work that you will have to do yourself. Then head back to QuickBooks Online, and from the expenses menu, from the sidebar, select vendors, and then instead of the new vendor option, click on the drop down button and select import vendors. Click on browse and select the Excel file that contains all of the vendor data, and then select next. Now you can see that QuickBooks has automatically mapped most of the data. However, there are some fields that you need to map on your own. You can then click on next and verify all of the data. If there are missing fields, then you can input them, and then click on import. QuickBooks will import all of this data, and you can definitely make the process a lot easier by properly formatting your spreadsheet or Excel file or the Google Sheet file that you are using to import all of the data into QuickBooks Online. If there's a person or corporation or business entity that is both a customer and a vendor to your business, then you can simply append a C for customer and V for vendor at the end of the name of the customer or vendor. QuickBooks Online provides you a host of features with which you can add and manage your products and services. But before you proceed, you should discuss with your accountant the inventory tracking method and the inventory recording method that you need to follow. So you have two options here. You can either go for perpetual or periodic inventory recording. With the perpetual one, you record your inventory in real time, and with periodic, you periodically record all of the changes that happen to the inventory. You may also have to discuss the costing method. So here you have three options mainly: first in, first out, last in, first out, and the average costing method. And all of these things you need to discuss with your accountant before you set up everything in QuickBooks. Let's start with adding inventory items. Log into your QuickBooks Online account and go to the gear icon on the top right corner. Now select products and services from the lists column. Select new, and QuickBooks gives you four options to record product and service information. So if you need to track the product or service, then you should go for the inventory item. But if you don't have to track it, then you can create a non-inventory item. If it is not inventory, but rather services that you provide to your customers, then you can select services. And the final option is bundle. If you provide combination of various products or services to your customers, then you can record it here. For this instance, let's start with an inventory item. Input the name of the item. SKU is the stock keeping unit. It is a unique identifier for each of the products, which allows any inventory management system to keep track of that inventory item. It is usually a combination of letters and numericals, and it is generally 8 characters long, but it is up to you how you want to create it. So I'll enter a random set of numbers. In the category section, you can select the category to which this product belongs. So if it is part of landscaping or pest control, you can select that here. Initial quantity on hand is the opening inventory. Basically, if you already have this item and you're recording it now. So if you purchased inventory before you created the item in QuickBooks Online, then you can record the opening inventory and the date of the opening inventory to better track the products and services that you are selling. The reorder point is kind of useful, especially if you are a retail or merchandising business. So if there's an item that is running low, QuickBooks will automatically remind you to send a purchase order to the relevant vendor. This makes inventory tracking and managing inventory a lot more easier and flexible for many users. So in this case, if the count of the inventory item falls below 20, QuickBooks will remind me to update the stock and purchase and to send a purchase order to the vendor. Whenever you purchase the inventory, which account does it go into? Because the journal entry for inventories is somewhat complicated. Whenever you purchase an inventory item, you debit the inventory account and credit the cash or accounts payable account. And when you sell the item, you basically reverse this entry. You recognize the cost according to the matching principle. So you debit the cost of goods sold, credit the inventory account, and you record the amount that you received and recognize the income as well. So I'm going to leave it as an inventory asset. The description will appear on sales forms, on invoices, or any purchase order that you send for this item. If you know the sale price for this item, then you can input it here. On the basis of the sale price and the cost, QuickBooks is able to calculate the total profit on each of the total profit on the sale of inventory item. Whenever you sell this item, to recognize the revenue and to record it, you can select an income account that you have created, and you can also add a new account at this point. If you have enabled sales tax in your company file and you need to calculate the sales tax, then QuickBooks will automatically calculate it for you on the basis of location. The purchasing information appears on the purchase order, the description. So when you send your vendor the purchase order for this item, the description will include whatever you write here. Further, you can input the cost, that is the amount that you buy this item for. So as you can see that the sales price is $200 and the cost is $100. So on the sale of each item, you'll make a net profit of $100. If they obviously assuming that there are no other costs involved. And you can select an expense account that is debited whenever you sell the product. By default, QuickBooks selects the cost of goods sold and debits it whenever you recognize the expense. But you have the ability to create a new account and select it as the main account for tracking the expense of this particular item. The preferred vendor is basically the vendor who you will be sending the purchase order for this item to. This option simply helps you to streamline your workflow and makes things easier. And we have created a new inventory item. But if you are migrating from another software, let's say you are bringing in data from a point of sale system or from an e-commerce platform such as Shopify or WooCommerce, then you also have the ability to import products and services. For this, you need to arrange and format your product and service data. Let me show you how you can import products and services in QuickBooks Online. Again, go back to the products and services menu, and instead of new, select on the drop down option, click on import. You have two options. You can either connect your Google Sheets account if you have the data stored on Google Sheets, and if you have an Excel you have stored locally, then you can click on browse and select the Excel file. Select next, and QuickBooks will recognize all the columns according to their headings and map them to the fields so that the data is recorded properly and accurately. You can make relevant changes here if you think that something isn't correct. You can make changes here if QuickBooks failed to correctly map the data. And once you are done, you can click on next, and QuickBooks will give you the final opportunity to make changes before you import this data. So I already have a lightsaber item. I'll create a second one so that I can later show you how to handle duplicate items. And then I'll click on import. As you can see, QuickBooks has imported all of these items. If by mistake you accidentally record inaccurate information about a product or service, then you can make changes to it. This again is quite simple. When you go to the products and services page, you can select the edit option. You can make the changes in this sidebar. Once you are done, click on save and close. And if you don't want a particular product or service in your company file, you want to remove it from your company file, then you have the option to make the product or service inactive. QuickBooks will remove the inactive product and service from all of the forms and the reports that you create from the software while retaining all of the transactions that are associated with this item. This workflow simply prevents you from accidentally deleting transactions and messing up your whole books. So if you want to make a product or service inactive, you can simply go back to the products and services menu and click on the drop down option besides the edit option, and then select make inactive. To confirm, select yes. And you have made the item inactive, so you can see that it does not show up in this list. And when a user tries to record an invoice or a bill or a purchase order, this item will not show up. To view all the inactive items in your company file, to view all the inactive items in your company file, you can click on the filter option here and select the status as inactive. Click on apply, and QuickBooks will list all of the inactive items. If you want to make this item active again, that is, you want it to appear in your reports, you want to record transactions related to it, then you can click on the Make Active button in the action column. And QuickBooks has made the item active once again, as you can see it here. Another thing that many users struggle with is duplicate products and services in their company file. So when you are importing a large amount of data or you are integrating QuickBooks with another software, you may end up with duplicate items, and that can create a whole sort of problems for you. QuickBooks enables you to merge all types of items except inventory items because they have a costing method associated with them. And simply merging inventory items can clearly mess up your books. However, you can still merge non-inventory items, bundles, and services. To do that, you first have to have duplicate items. So I have two duplicate items here and I want to merge the second one into the first one. I can do that by renaming the second. I'll click on edit and make the name same to the name of the original item and select save and close. Now QuickBooks will display a warning that you already have an item with the same name and would you like to merge the two? If you click on yes, QuickBooks will merge the two items. And as you can see, the second duplicate account is gone and you have successfully merged the two items together. Sales tax is an indirect tax. That means that you need to collect the amount from your customer and then forward it to the government. Let's say, for instance, you sell a product of $100 on which 10% sales tax is applicable. Here's how you record the journal entry. You debit the cash or checking account with $110. You credit the sales tax payable account with $10 and the sales revenue account with $100. The sales tax is recorded in a current liability account because it is an amount that you owe to the government. It is not the amount that you own. And you store the value of this amount in the sales tax payable account, which is a current liability account. The payment for the sales tax is made to a mix of state and local tax agencies. And when you make the payment, you record the journal entry by crediting the cash or checking account and debiting the sales tax payable account. What makes sales tax complicated is that the rules are all over the place. Companies had to pay sales tax only when they operated in a state or locality where sales tax was applicable. But all of that changed since the Wayfair ruling, which established the economic presence nexus. The economic presence nexus states that you need to pay sales tax if you simply sell the item in a state or locality that collects sales tax, even if your business does not operate in that state or locality. And so it becomes very difficult for a company that sells their products or services in different states to figure out how much sales tax they need to pay because each state and locality has different set of rules, different tax rates for sales tax. Head over to while sales tax is complicated, QuickBooks makes it easy. When you go to the sales tax option, the app guides you through the process of setting up sales tax. Go to the taxes menu and select sales tax. This is what will appear when you are setting up sales tax for the first time. Select get started. This is the business address that you set up while creating your QuickBooks account. However, you can make changes to this address by clicking on the pencil icon. And once you have made the required changes, you can select next. Select the agency for each sales tax rate. The bulk select option applies agencies to all the selected tax rates. You cannot change the tax rates while setting up taxes, but you can edit them later on, and I'll show you how. And then move to the next page and select save. And now you'll be able to access the sales tax center where you can configure the sales tax, their payment frequency, and a lot more. And let's go to the sales tax center. You have to select the frequency for filing the tax form, monthly, quarterly, or yearly. The good thing is that you have the breakdown of requirements as per the agency. And of course, you can cross check the information and learn more from the source link given below. Once you have selected the options for all of the sales tax agencies, you will have complete access to the sales tax center. In sales tax settings, you can modify or add sales tax rates. The economic nexus option, on the other hand, shows you all of the states where sales tax is applicable and where you have customers. So essentially each states where you have to file sales taxes and pay them. You also have several sales tax reports. The sales tax liability report calculates the amount of sales tax that you need to pay for a specific period of time. And to pay sales tax, you can fill out the tax form on the tax agency's website and then mail them the check or pay online. With all of that out of the way, you can record the sales tax payment. In the sales tax center, choose the tax agency and then select view tax return. And what you have here is the amount of sales tax that you need to pay. You can add an adjustment to reduce your tax liability. And after configuring all of the options, you can click on record payment. Select the tax amount that you paid and the payment date. Choose the bank account that you use to make the payment and input a memo that can serve as a reminder here, and you can also print the check from here. Once you are done, click on record payment and you are done with sales tax. By setting up sales tax correctly, you can avoid penalties from tax agencies. You issue a sales receipt when the customer makes the payment at the time of purchase. You issue a bank deposit if the customer deposits the money with a check, and you record an invoice if the customer promises to pay you later. QuickBooks has a workflow for all three of these, but let's start with the sales receipt. You can go to the new menu and select sales receipt. Select the customer, and QuickBooks will update all of the information automatically. You can create tags if you want to further classify your data and organize it. In payment method, you can select the method by which the customer made the payment and select the account that the amount was deposited in. Undeposited funds are mainly for the amounts that your customer has provided you with a check, but you haven't yet deposited into your bank account. When you finally deposit this amount into the bank account, you can remove the amount from the undeposited funds account and transfer it to the checking account. Select the products and services that the customer bought from you. And if a sales tax is applicable on this amount, then mark the option for tax. You can also customize this template if you want to add your own unique brand style, your brand's logo on this sales receipt. You also have the option to print or preview, and you can input any message that you want to be displayed on the sales receipt. Now, this is generally a good idea if you are going to provide this receipt to a customer. Further, you have the ability to customize the whole template for the sales receipt. This is very useful, especially if you want to maintain brand consistency, apply your brand's logo to the invoice or sales receipt. You can preview the sales receipt and also print it. In the attachments, you can attach any contracts or receipts that you want to keep as a proof. And finally, once you have made all of your selections, you have recorded the discounts, the sales tax rate, you can click on save. So when you record the sales receipt, it simply debits the checking account in this case and credits the sales account in order to track the revenue. Let's go to our second option now, which is bank deposit. When the customer pays through a check, you record it as a bank deposit. Generally, most businesses record the funds collected through checks in the undeposited funds account. When they later deposit all of these checks in the bank account, they transfer the funds from the undeposited funds account to the checking account. To create a bank deposit, go back to the new menu, and in this other section, you can click on bank deposit. Select the account that you are going to deposit these checks in and the date of the deposit. Input tax if you want to categorize the data further, and select the checks that you are going to record as a bank deposit. In this case, I am going to select all of these checks. In the payment method section, select the method by which the customer made the payment. Input a memo if you want to include a reminder in this bank deposit form. In reference number, if the customer made the payment by check, then you can input the check number, and if the customer made the payment directly through the bank, then you can input bank here. After verifying your settings, you can click on save and close, and you have successfully recorded the bank deposit. Let's move to the final option, which is the invoice. The invoice is issued when the customer promised to pay you later, so you won't receive the payment on the date the customer gets the product or service, but rather the customer will pay on a later date. Because of the revenue recognition principle, you record the amount for the product or service in the accounts receivable account. To create an invoice, we'll go back to the new menu and select invoice. Select the customer. Choose the number of days that the customer has to pay you back. The net terms simply means that the customer has 10 days, 15 days, or 30 days from the time of the issue of the invoice to make the payment. On the basis of the invoice date, QuickBooks will automatically input the due date. You can use these dates to later create aging receivables report and see the customers that still owe you money. Select the products and services. Input the message on invoice, message on the statement. Select the discount percent if you have given a discount to the customer. Select the sales tax agency and attach any relevant documents, contracts, or receipts with the invoice. Finally, once you are done, click on save and close. and you have saved the invoice. Invoicing is a two-step process. So first you issue the invoice and record the amount in the accounts receivable account. And when you receive the payment from the customer, you transfer the amount from the accounts receivable account into the cash or checking account. To receive payment, go back to the new menu and select receive payment in the customers column. Select the customer that has an open invoice with you. Select the method of payment. If the customer provided a check, then input a reference number, which is usually a very good practice. Select the amount that you received from the customer. Now the total amount that is due can be calculated from here. If the customer made the payment for the first one, then you can select $85. And if you want to divide the payment between multiple products, then you can do it here. Input a memo, which can serve as a reminder. If you have any relevant documents, you can attach them here and click on save and close to receive the payment from the customer. Revenue, of course, is just one part of the whole equation. You also need to account for the expenses. To record expenses, you can either use bills or checks. While for payments for which the vendor or supplier has granted you a credit, that is, you will be paying on a later date, you can use the bill. And to record immediate payments, you have to use a check. By recording both the revenue and expenses properly, you will be able to figure out the net profit for your business. Head over to the new menu and select bills from the vendors section. Here you can either select a vendor or create a new one. QuickBooks will automatically populate the fields with the data you entered about this vendor. In terms, you can select the number of days that you have to pay back the vendor. Enter the bill date, that is the date on which you made the purchase. And if there's a due date on the bill, then enter it here so that QuickBooks will be able to remind you to make the payment on time. The bill number corresponds with the invoice number that the vendor sent you. However, if there is no invoice number on the invoice that you received from your vendor or supplier, then enter a unique number as an identifier here. You can enter tags to categorize the transaction. Select the category to which the expense belongs. Enter a description, the amount for the expense, and you can also associate a customer with this expense if this expense was used to generate a product for this customer. And if the expense is related to a product or service, then you can also input that here. Enter in a memo as a reminder and attach the receipt for the expense. And once you have made all of the selections and entered all the essential information, click on save and schedule payment. To record the payment for the bill, click on the Pay Bills option from the new menu. Select the bill that you want to pay, and then in the right corner, click on the drop-down menu and select Save and Close. And the bill has been marked as paid. So let's say Darth Vader purchases a new laptop for all of his employees so that they can get back to building a new Death Star. So if he purchases the laptops by paying through a check, then he can create a check in QuickBooks Online. If he pays the amount for the laptops with a credit card or with cash, then he can go and create an expense in QuickBooks Online. And finally, if he plans to pay later or receives an invoice from the vendor, then he can record the transaction in QuickBooks Online as a bill. So a brief TLDR would be that you can create checks for check payments, you can create expenses for payments with cash or credit card, and you can create bills for accounts receivable. Okay, so let's start with creating a check in QuickBooks Online. Once you have logged into your account, you can go to the new menu and select check. You can then select the payee, the person who you are issuing the check to. You can select the bank account from which the money will be withdrawn. Again, you can also add a new account if you want to at this point. So if you want to print the check at the same time you create it, you can click on the print check option down here. But if you want to save it for later, then you can select this checkbox. I'm going to select this checkbox for now because I want to show you how to print out multiple checks at once. Here you can also enter tags. These tags can help you categorize your checks and transactions better. Now you can fill in the rest of the information, and once you are done, you can select save and new. Now I'm going to enter two checks here quite quickly. So once you have created all of your checks and you have added them for printing out later, you can go to the new option and select print checks. Now here's the list of all of the checks that you have added to the queue. You can also take a printout of this list by selecting this print list option here, and you also have the option to change the settings here if you want to. Now down here you will find the print setup option. This allows you to change between voucher and standard checks in QuickBooks. So voucher checks generally require a documentation or proof of payment, and that is why it is generally used for reimbursements and paying employees, whereas standard checks are used to make more straightforward transactions. By creating a sample check, you can check if the alignment is correct or not. So once you are done with your selections, you can go to yes, I'm finished with setup. Now you can go back to the print checks option and you can select all of the checks that you want to print at once. Now before you can start, you have to enter a starting check number. I'll go with 1 here. And finally, once you are ready, you can click on preview and print. Now, if your checks printed out all correctly, then you can simply click on done here. But if they did not, then you can select either the checks that weren't printed out correctly, or you can select to keep all of the checks still in the print checks list to print them once again with adjusted settings. And then you can make the necessary adjustments and change the settings and then take a printout. For me, the checks printed out correctly, so I'm going to click on yes, all printed correctly, and then done. So let's say if you don't have checks and you want to order them, then you can order them from several places. But the best option is to go with QuickBooks Marketplace. And here you will find all of the type of checks that QuickBooks Online supports. And you can make your purchase from here, and all of the checks will be imported into QuickBooks Online. And while making your selections, you can select which type of check you want to print. How do you post adjusting entries at the end of an accounting period, or void a check, or maybe correct the errors that identified during the bank reconciliation process? The answer to all of those questions is by posting a custom journal entry. Let's see how we can do that in QuickBooks Online. Once you have logged into your QuickBooks Online account, you can go to the new option and then select journal entry. Now let's take an example. Let's say this business invoiced a customer $100 in return for a design service. How do we record this transaction? First of all, we debit the accounts receivable account. So here we selected the account and we debit it by $100 because accounts receivable is an asset and it is increasing. On the flip side, we have to credit an account, and in this case, we are going to credit the income account because of the revenue recognition principle, which states that you have to record the revenue at the time when it's earned, whether or not the customer has actually paid you the cash amount. Now, since this is an accounts receivable account, you also have to enter the name for a customer. And in this case, let's select Amy's Bird Sanctuary. And we can also add a memo to make this transaction descriptive and later identify what we created this custom journal entry for. If you want to attach a document, you can do that by clicking here and uploading a document. Finally, once you have verified all of the information that you entered, you can click on Save and New. Now let's say the customer pays the invoice. How do you record that transaction? Let's say the customer paid it on 18th of March 2023. Again, two accounts are going to be affected here. First of all, we'll have the accounts receivable account. And second, we are going to have our checking account. We are going to decrease the accounts receivable by $100 because the customer has paid this amount. And we are going to debit the checking account by $100 because we have received the money in our bank account. Again, you can input more information if you like to and attach a document. And since this is an accounts receivable, you have to enter the name for the customer. And once you have verified all of the information, you can click on save. Let's say you are recording an invoice and you want to see on the back end how QuickBooks is recording that transaction. Well, you can do this in QuickBooks Online. In QuickBooks Online, you can go to the sales menu and then select invoices. Here you can select any of the invoices to view the journal entry behind them. Then select edit and wait for QuickBooks to show the invoice. Then go to More and select Transaction Journal. Now here QuickBooks will show you the entire journal entry that has been recorded when you posted this invoice. But what if you want to see all the journal entries in your QuickBooks Online account? There's no particular option to go and see journal entries, but you can create a journal report which gives you all of the transactions in the format of a journal entry. So let's check this out in QuickBooks Online. Once you have logged into your QuickBooks Online account, you can go to the reports menu, and in the reports menu you can type in the name of the report here. So in this case we want a journal, and then select. Now you can select the date range. You can choose a custom date range if you want to filter out transactions from a particular period of time. In this example, I'm going to show you all of the transactions. So here you can see all of the transactions, the transaction type, the memo, the name of the customer or vendor associated with this transaction, and the debit and credit sides. You can email this report to share it with others, or you can take a printout and save it as PDF. And if you want all of the data from it in the format of Excel or CSV, then you can choose the export option. If you want to view who created this transaction, you can click on the settings icon here and select created by. And QuickBooks Online will update the report and show the user who created this invoice in the first place. You can also use the audit log in QuickBooks Online to view which user posted a particular transaction, and the audit log can be accessed through the settings menu, and in the tools section you can find the audit log. And here you can see all of the actions a user took. So all of this is logged. If a user signs in or signs out, that information is stored within QuickBooks Online. Since you want to find who posted a particular entry, we'll leave it at all users. You can change the date. So we'll go with this here, and we want to view all of the transactions that were posted. So we can go to all transactions and find out the name of the user who posted the transaction. There's yet another option in QuickBooks Online that lets you view the journal entries that were created, and it also gives you all of the advanced features to sort of filter or sort out these transactions. So let's do this in QuickBooks Online now. To view the advanced options, you can select the search icon here on the right corner. Now here you can find the advanced search option. Now you can search the transaction by entering all of the information that is given here. So you can select a custom date range, and you can select the type of transaction. So let's select journal here. If you have a reference number, in this case, I don't have any, so I'll leave this blank. You can then select the customer if you created an accounts receivable. And finally, you can enter in if you know the amount for the transaction. Since this company file has no journal entries, it is showing as blank. But if you look at any other type of transaction, you'll see that a lot of information is available to you through the advanced search menu. A word of caution here, because you shouldn't actually post a journal entry without consulting with your accountant first, because these journal entries are then posted to your ledger account, which then affects your trial balance and your balance sheet. If you mess up your company file with custom journal entries, you are going to have inaccurate reports, and it is going to create a host of problems in the future for your company. Consult with an accountant and only then post your journal entries. And if you are an accountant, then you don't need to worry about it at all.
Reports are a great way to gather useful insights from your accounting and finance data. Once you have recorded all of the data in QuickBooks Online, you can basically create standard reports such as the balance sheet, the statement of cash flow, and the income statement. But there are a host of other reports that you can use. When you go into QuickBooks Online, you can go to the reports menu and click on reports. The tabs here represent the standard reports, which are analysis of your business data. Custom reports are something that you can create and save in QuickBooks Online so that you can recreate them without customizing again and again. And finally, management reports are simply all of the reports that you have selected, and you can export them as a PDF document to share with, let's say, your shareholders or with financial institutions to get funding. The spreadsheet sync option is quite new, and it allows you to sync data from your reports in QuickBooks Online to Excel, and that makes it easy to analyze your data in Excel or other business intelligence softwares such as Power BI or Tableau. Reports in QuickBooks Online also help you to stay in compliance with taxes. So you can calculate your sales taxes and you can calculate the payroll taxes that you need to pay for a quarter or a year. And that sort of simplifies the whole process of managing your business. So in the standard reports tab, you can see that you have a favorite section in which you can select any of the reports. You can mark it as a favorite and it will show up here so that you can quickly find it. The business overview reports are quite simple. These are the main financial statements that are relevant for your business. So the balance sheet will give you a quick snapshot of your business's financial health, and the income statement will show you the net profit that your business generated for a certain time period. And the cash flow statement can be used for seeing the inflow of and outflow of cash, which is very important for small businesses. Another thing to note here is that in QuickBooks Online, you have the option to create budgets for a certain time period, and creating a budget allows you to estimate the basic income and expense that your business will generate and incur for a specific period of time. What this does is allow you to create actual versus estimate reports in the future so that you can gauge how much you spent over your estimates, or you can identify the key areas in which you need to cut costs. The Who Owes You section presents all of the reports that you can look at to understand who owes you money. So you will have the accounts receivable aging report here, which shows you all of the customers that have an open invoice, and it can also give you a breakdown of all the invoices and the number of days they have been due so that you can reach out to those customers and get paid on time. The sales and customers reports is another easy way to drill down into what products or services you are selling the most, what customers have bought the most from your business, so that you can hone in and focus on those customers, understand where those products are that are not selling, and maybe eliminate them from your business's inventory. The what you owe reports simply show you how much you owe to, let's say, a vendor or a federal tax agency or a state tax agency. You can create these reports and ensure that you are paying your dues on a timely basis in reaching out to those vendors and negotiating a better price with them, because you can show them that you are a loyal customer and that you have regularly bought a very high amount of materials from them. The sales tax report is not relevant for every business because not every business has to pay sales taxes. But if you sell your goods in a state where sales taxes are applicable, then this report can definitely help you out there. And if you have payroll subscriptions, then you can go with the employee reports and the payroll reports. Now let's come to the business overview reports. These reports show you the financial health of your business for a particular period of time. You have a lot of options when it comes to business overview reports. To view these reports, you can go to the reports menu. And here you will find the business overview section. As you can see, you have the balance sheet reports, the audit log, the profit and loss report, and the statement of cash flow. Let's start with a profit and loss report because that is often one of the most important reports that you have to look at. You can see that you have the total income for the given period. So you start off with a gross income, and here's a simple breakdown for it in the report here. And after you move from your total income, you go to the expenses section where you see the cost of goods sold and the expenditure on various other operating and non-operating activities. When you remove the expenses from the gross income and add any other income that were obtained from non-operating sources, you get the net income for the given period. Now you can use this net income in the balance sheet, which I'll get to. As you can see, there are a few options here that QuickBooks gives you. These options allow you to customize the report for your own purposes. So if you don't want the report to be year to date, you can select for this current week or this current month or even quarter, and QuickBooks will automatically update the date range. You can also click on this calendar icon and select custom dates to create a more personalized report. To further drill down into your data, you can look at the display columns by option, and you can further drill down on this data according to weeks or months. It becomes very easy to compare the numbers for the different months or quarters. You have the option to turn off inactive accounts and non-zero accounts. So non-zero accounts should be accounts with a balance of 0, and inactive accounts are those that you have marked as inactive so that they don't show up in your company file, in your chart of accounts, or while a user is recording a transaction in the software. If you want to compare the profit and loss of this period that you have selected with another period, then you can also select that. You have the option to change the accounting method. Now, you should stick here with the accrual method because that is fundamentally what most businesses are using. And when you have customized everything that you want to, you can click on Run Report. QuickBooks also gives you the option to sort of save this customization so that you can create the same report again for a different time period using the same template and the same options. To create this, to save this customized report, you can click on Save Customization and you can enter a name for this report. You can add the report to a group if you want to, and you can share it with other users in QuickBooks Online. Once you are done, you can click on Save and the report will appear in the custom section of the reports menu. Let's go and check if it does appear there. So as you can see, here's the report that we saved and it is here in QuickBooks Online. Let's go back to the standard reports and move on to the balance sheet. The balance sheet gives you a snapshot of your business's financial health, so it does not display a whole duration and how assets and liabilities were affected in those duration. It is rather a simple snapshot that shows you this is what the business's financial health is at this point in time. So you can see that here's the date for the balance sheet, and you have the breakdown of assets, liabilities, and owner's equity here. In assets, you can see the current assets such as banking accounts, checking accounts, your debit card, saving accounts. Then you have the inventory if you manage inventory, and you also have the accounts receivable, which are forms that you issue to your customers if they agree to pay on a later date. Then you have the fixed assets, which are plant properties and equipments. You will have your vehicle accounts stored here, as well as any fixed assets such as an equipment that you purchase for business purposes. The liabilities section displays everything that you owe to someone else, that the business owes to someone else. Here you will find the current liabilities, which are often amounts that are due within a year. You also have the non-current liability accounts, which are notes payables. If you have taken a loan from a bank, then that will be displayed here. And you can see the total of the liabilities here. And finally, you have the equity section, which shows you the retained earning and the net income. So the net income is taken from the profit and loss statement. And finally, you have the total liabilities and equity, which should equal the total assets in the balance sheet. Again, similar to the profit and loss statement, you can customize the balance sheet report as well, and you can save the customization. The next important report for most businesses, especially small businesses, is the cash flow statement or the statement of cash flow, which shows the inflow and the outflow of cash for a given time period. And you can again go to the business overview section and click on statement of cash flows. So because we are only including cash here, we'll remove the accounts receivables and the accounts payables effect on the net income. Then there are three different sections in the cash flow statement. First is the cash flow from operating activities. These are the main activities that your business engages in order to provide goods to the market. So the main activities include manufacturing, distribution, sales, marketing. You then have cash flow from the investing activities. So if your company has invested in plant, property or equipment, then that would show up here. Then the cash flow from financial activities shows the cash flow related to funding of the business. If your company has provided dividends to shareholders, that would appear here. If your company has taken a loan, then that would also appear here. And on the basis of that, you will get the closing balance for the cash account, which you can then correlate with the bank statement in order to get a more clear picture of your transactions. We'll go back to the report section, and here I want to show you another business overview report that most people don't use but is very important to keep track of, especially if you have multiple users accessing your company file. So here we go to the audit log, and the audit log shows you all of the activities that different users have engaged in on QuickBooks Online. So even if a user signs in or signs out, that activity is logged here. All of the forms that are created and changes that are made, all those changes are logged here. So if you want to find out if someone made a change that you don't agree with, then you can go to the audit log report and check those changes and who made them and take the necessary actions needed.
These two reports can help you immensely in finding out all of the open invoices and all of the customers who still have an open invoice with your business. Go to reports and scroll down to the who owes you section. You have two versions of the accounts receivable aging report, the detail and the summary. The summary gives you information about the customers who have an open invoice with you along with the amount that is still due. And the detailed report gives you a breakdown of all of the invoices that are due for each of the customers. So it includes additional details such as the invoice date, the invoice number, the total amount for the invoice, so that you can analyze your data in more detail. We'll go with the summary report so that I can explain it more succinctly. And in this report, you can see you have all of the customers listed. These customers have an open invoice with your business. The current section shows the amount that will be due in the current accounting period, and you have a breakdown of all of the accounts receivable according to their age. You can customize the report settings. You can select a custom report period as of date. In the aging method, you can select the report date so that QuickBooks will calculate the age of accounts receivables as per the date range that you have set for the report, and you can select current if you want QuickBooks to calculate the age of these receivables as per today's date. Days per aging report can also be customized. So if you want to group account receivables on the basis of 15 days each, then you can do that here, and you can customize the number of periods as well, and then select run report. The report gets updated, and if you want to retain these settings and use them to regularly create reports on a regular basis, then you can select save customization and select save. You can go back to the reports page and select the custom reports tab, and you will find the customization that you saved for this report so that you can recreate the report with the same settings. And if you want to see a visual representation of the aging receivables report, then you can go to the performance center, and here you will find visual representation of the open invoices on the basis of the number of days they have been due. Another report that you can create is the open invoices report, which also displays all of the open invoices. But the key differentiator here is that the open invoices report gives you details about the invoice as well, and it does not group invoices by the number of days the invoice has aged. So you can use this report to quickly look at all of the open invoices, the customers who have an open invoice with you, and the total amount that is still in your accounts receivable account. Scroll back down and click on open invoices. Make any customizations over here. Again, the aging method calculates the age of an accounts receivable according to the date. So if you choose current, it would calculate the age from
today's date, and if you select report date, it will calculate the age as per the date that you have set for the reporting period. And once you are done, you can save the customizations if you want to recreate this report in the future. Your customers and clients are important to you, but how do you find out who are the most important ones for your organization? How do you find out who purchases the most amount from you, or who brings in the most amount of revenue for your business? You can use the sales by client or customer report to quickly find your best customers and your worst customers. To create this report, go back to the reports menu, and in the sales and customer section, select sales by customer summary. Customize the date range for this report so that QuickBooks can display information that is available to it. This report shows the amount that each of your customers has spent on your business. So it becomes very easy to find your best customers and your worst customers. And then you can give this data to your marketing team so that they can plan their ad campaigns and target the customers that are bringing in more revenue. And if you want to find out your top selling products and services, then you can go back to the reports menu and create a sales by product service summary. Again, make the necessary customizations, and QuickBooks will give you the whole analysis of the products and services that you have sold. So you have the total quantity, amount, the percent of sales that the product or service constitutes, the average price at which you have sold the product, the cost of goods sold, which is the cost at which you purchased and manufactured the item. Then you have the gross margin, which shows you the total amount of profit that you made before accounting for taxes and other non-operating expenses. You can export these reports in PDF format and Excel format to further analyze or share the report. And QuickBooks Online also has this new feature that you can use to send the report to the management reports section so that it can be included in a PDF document that you can send to your managerial team for making decisions for marketing, operations, and other purposes. The Accounts Payable Aging Report, also known as the AP Aging Report, groups the unpaid bills by the number of days they have been due. QuickBooks automatically calculates the age of these accounts receivables on the basis of the report period that you select. To access the Aging Receivables report, go to the Reports menu, to the What You Owe section, and select the Accounts Payable Aging Summary Report. Customize the report by choosing an aging method, customizing the days per aging period, the number of periods to include, and to show non-zero or active only accounts. Non-zero accounts that show an activity during the selected reporting period, and the active only accounts are those that have not been marked inactive. You can choose the customize option and find such as filters so that you can create the report for a specific vendor, and then you can select run report. The Accounts Payable Aging Summary Report will show you the vendors who have an open invoice with you, and it will further classify all of the accounts payable on the basis of their age from the date that you received them. Now that you know how to access the Accounts Payable Aging Report, let's move to the next important report for managing vendors. And this is the Unpaid Bills Report. Unlike the Accounts Payable Aging Report, the Unpaid Bills Report shows you the detail of each of the bills that has still not been paid by you. So you will get the amount of the bill, the date the bill was issued to you, and the number of days you have to pay the bill. So for instance, if you want to see all of the bills that have been overdue by let's say 30 days, then you can filter the report and find those bills out. Go back to the reports menu and head over to the What You Owe section. Select the Unpaid Bills report. You can further filter this report, and to do so, you can click on the Customize option and select the reporting period. The aging method decides how the bill's age is calculated. You can also input the minimum days past due. So if you want a threshold to view bills that have been due for more than a certain number of days, let's say like 30 days, then you can do that here. And you have other filters, such as if you want to see the report for a specific vendor, or you want to select particular terms that you agreed to with the vendor. Once you are done with the customizations, you can click on Run Report. By regularly reviewing these two reports, you can maintain good credit with your vendors and suppliers. To find out where your hard-earned cash is going, you can create vendor and expenses report. Let's dive straight into it. Let's assume that you have your own business and you sell lightsabers. because why not? Now you want to find out your top vendors, that is the vendors you have spent the most amount with, so that you can reach out to them and negotiate better terms or prices. And maybe along the way you have worked with freelancers and independent contractors. You have paid some of them more than $600 during the current accounting period, so they become 1099 contractors, and you need to file the 1099 tax form for each of those independent contractors unless and until they are incorporated. The expense by vendor report helps you to figure out your top vendors and all of the 1099 contractors in your company file. It's like an all you can eat buffet for all your expenses data. First, we have got to go to the reports menu. Then you need to scroll down to the expenses and vendors section. So let's go. Now click on the expenses by vendor summary report. The expenses by vendor summary report will give you your expenditure on each of your vendors. You can sort this report in order to find out your top vendors, that is the vendors that you have spent most of the amount on. And you can then reach out to these vendors and negotiate better terms and prices so that you can reduce your costs. To dig deeper, click on the customize option. You can adjust all of these settings. So for report period, you can either choose one of the available presets or enter a custom date range. You can also choose the preferred accounting method, that is cash or accrual. You can change the format of the numbers as per your preference. So if you want to see negative numbers wrapped in a bracket, then you can do so here. And you can also select a color for that negative number. And in columns, you can choose to show info by total only, or weeks or months, or even customers and vendors. You can hide all of the inactive accounts and non-zero accounts. So the inactive accounts are those that you have specifically marked as inactive, and the non-zero accounts are those that have shown some activity during the selected report period. You can also select comparison options in order to compare your data with another period. The filter option further gives you the option to narrow down your search for particular vendors, and you can customize the report and how it looks by changing the header and footer. And this is really important if you want to send this report to management or to any financial institution. Once you have made your customizations, you can click on run report, and there you have it. And if you are craving more information about your vendors and the expenses, you can create a detailed version of the expenses by vendor report, which gives you a complete breakdown of your expenses by each vendor. To view detailed information of the bills that you have paid and their breakdown, you can create the bill payment list report. Let's dive straight into it. We'll head back to the reports menu and head over to the what you owe section. Then you'll pick the bill payment list and customize the report by selecting a different period. If you don't have the data for the selected one, then select run report. And here's a breakdown of your bills along with the vendor that you paid the bill to. Two important things that you want to note here. First, the total for the checking is negative, but for that of MasterCard, it's positive. And this is because one, the checking account is an asset account, whereas the MasterCard account, which records credit card payments, is a liability account. So payments from checking account reduces balance in that account, and payment with credit card increases balance in the MasterCard account. Ergo, the positive and negative balances. Now you have two ways to write off this bad debt. Either you can go with the direct write-off method, which is simpler and easy to use, and then there's the allowance method, which is much more complex. So let's see the direct write-off method. You simply transfer the amount of bad debt from accounts receivable account to a bad debt expense account. But in QuickBooks Online, the process is a little bit more complicated because you have to create a bad debt expense account, you have to create a bad debt item, and then you have to apply a credit memo to the open invoice so that you can record that as a bad expense. Let's see how we can do this in QuickBooks Online. Step 1. Check for bad debt. You can do this by creating an accounts receivable aging report, which helps you see all of the overdue accounts receivables in your company file. First, go to the reports menu and select accounts receivable aging detail. Then note all the outstanding accounts receivable that you believe should be written off. Step 2. Create a bad debt expense account. A bad debt expense account is where you will be putting the money from the accounts receivable account so that you can record your bad debt expenses and track them in the software. Go to the settings menu, select chart of accounts, then click on new. Under account type, select expenses, then bad debt as detail type. Name the account bad debts and click on save and close. Step 3. Create a bad debt item. Now this is a little more complex, so you will understand it a bit later why we are creating this item, but for now just follow along with this method. Go back to settings, then select products and services. Click on new, then non-inventory. Input bad debts as the name for the item, and under income account select bad debts, then click on save and close. Step 4. Create a credit memo to apply the bad debt to the invoice. Credit memos are generally used when you want to offer a customer credit in exchange for a refund or an exchanged item. But in this case, we are going to use the credit memos to apply our bad debt expense onto the accounts receivable. Go to new, then select credit memo. Select the customer for whom you are creating the bad debt expense, then select product or service and select the bad debt item that we created in the step before. Now this is where the bad debt item comes into play. Because you want a placeholder in order to track these bad debt expenses, you use the bad debt item in order to do so. Input the amount to write off, then enter bad debt in the message. Once you have verified all the information, click on save and close. Step 5. Apply the credit memo to the invoice. Now this is quite easy. You can go to the new menu, select customers, then receive payment. Select a customer, then select the invoice under the outstanding transaction section. In the credit section, select the credit memo that you created to apply the bad debt, then click on save and close. And you can easily check the impact of writing off these bad debts in both the balance sheet and the income statement of your books. Now here are 2 pro tips that you can use. First of all, you can create a bad debt report by going to the chart of accounts and selecting create report for the bad debt expense account. And second, you can mark the defaulter, who is your customer, as a bad debt customer so that you can keep track of future transactions more easily. For this, you can go to get paid and pay, then select customers and choose the customer's name. On the upper right corner, then select edit. Under display name as, append bad debt to the customer's name and then select save. And remember, if you believe that you can still get paid by your customer, then you should reach out to them in order to recover some of the amount so that you can minimize your losses and bad debt expenses.